Hello everyone, this is CA HARIPRASAD. Welcome to HM Commerce Education. So today we are going to do a quick revision of the Depreciation and Amortization chapter for CA Foundation. So for whom is this video? This video is for everyone who is like planning to start to read the chapter now, or who has read it before and who has forgotten the topics. So don't worry, we will quickly be covering all the topics of this chapter, and we will be also seeing some questions of the ICA material to understand the concepts better. And we will try to finish this chapter as early as possible, so this helps you even during exams, like just before your exams you see this video, the entire chapter is covered. Okay, so that is our only motive, that we want to finish this entire chapter as early as possible. Okay, this is a very easy chapter, so you don't have to worry at all. Okay, let's quickly get started. Okay, so okay, so before seeing what is depreciation, quickly we will see some background. Okay, then we will get to what is depreciation, how it is, what is the methods, all that we will see. Okay, so suppose you have spent some money. Okay, what are we doing? We have spent some money. Now this money, because you spent, you are going to get some benefit, correct? So if you are going to get some benefit, you spend on whatever you want. You spend on electric bill, that you will get electricity for a month. You spend on rent, you will get to use the space for a month. Okay, like that you have spent some money. Now this spending, whatever you have done, you are going to get some benefit. I told you that is called future economic benefits, correct? This future economic benefits, FEBs, this FEBs, if it is more than 1 year, if it is more than 1 year, we will treat it as an asset, correct? If it is more than 1 year in one accounting year, okay, one accounting period. If it is less than one accounting period, if that benefit what you're getting is for less than one accounting period, then we will treat it as an expense. Okay, suppose you paid rent, you will not get it for more than one accounting period, correct? So if you're paid more rent, okay, if you're paid a rent for more than one accounting period, that will be treated as advance rent, correct? It will not be treated as an expense for this year, like that. So if you have paid something for the benefit that you're getting for less than one accounting period, that will be treated as an expense. And if it is for the benefits you're getting for more than one accounting period, then you will treat that expense, that you will treat that spending as an asset, correct? Now why am I telling this to you? Depreciation is something, okay, that is provided on an asset. Okay, so depreciation is something that is provided on an asset. Now just see this. I told you, for example, we will take a car. Now you bought a car for say some amount. Okay, this car, how many years can you use it? For example, let's take it as 10 years. Okay, 10 years you're going to use this car. Now you pay 10 lakh rupees on day one. The value of the car on that particular day is 10 lakhs, correct? That value of that car on that particular day is 10 lakhs. But after 1 year, will the value of that car be still 10 lakhs? Will it be 10 lakhs only? No, it will not be 10 lakhs. Will the value of the car be still 10 lakhs after 1 year? No, it will not be 10 lakhs. It would have reduced. Why would it reduce? It will reduce for multiple reasons. It can be because other cars have come into the market. There is technological advancement. You have used the car, wear and tear, multiple reasons why the value of the car will reduce. Correct? After 1 year, if you pay 10 lakh for the car in the beginning, after 1 year, the value of the car is not 10 lakhs. It can be any amount. Correct? Suppose it is reduced by 1 lakh. Now this reduction in the value of asset only is depreciation. Simple terms. Okay, let's not confuse with many things. Simple. If you are using an asset, you're paid for an asset. Because why did you treat it as asset? Because you're getting benefit for more than one accounting year, and for a particular accounting year, that benefit what you used, that whatever benefit you used from that asset, that much you should reduce from the asset and put it to P&L in the form of depreciation. Okay, so We bought a car is for 10 years, correct, but in the first year we are getting some value, we are already consuming that value, we are using that value, correct. That value what you used, what you consume, that much you put it to P and L as expense, correct. So over the period of 10 years, every year you will be putting some amount into P and L as depreciation, and at the end of the year the value of the asset will be zero, and even the value in your books also will become zero, because you have removed some value and put it into P and L, correct. Are you getting it? Simple terms, correct. So we will quickly see this. So now what will you depreciate? Okay, so very simple. What will you depreciate? Depreciation is that amount that you will reduce from the asset after its useful life. That means after useful life means what? You bought a car, 10 years you can use. After that, that car will not even start. You're assuming after 10 years is the useful life of this car. After 10 years, this car will not even start. It will not be useful, correct. So after 10 years, what is the value you will get? Will you get any value? You should check. Okay, if you are getting some value for scrap, that means you give it to a scrap dealer, he'll give you some 50,000, 1 lakh rupees. Now, even after its useful life, if you are getting some value, should you depreciate this amount? No. So this is called residual value or scrap value. You should not depreciate. So the remaining amount of that asset is called the depreciable amount. Okay, very quickly I've told you. So what is the depreciable amount? It is that value which you need to reduce from the asset over its useful life, because even after useful life, you are getting some value in the form of scrap value. That is why you will not be depreciating the scrap value, only the depreciable amount will be depreciated. Got it? Okay, so in our example here, quickly, we have spent 10 lakhs on a car. Okay, useful life is 10 years. Scrap value we are assuming is zero. That means after 10 years I am not getting any scrap value for this car. So how much should I depreciate? I should depreciate the entire 10 lakhs, correct. So if you see, money should be expensed. Whatever I've spent on this car, which is an asset, but I should expense this money. Should I expense entire 10 lakhs in the first year only? No. Why? Because I'm not using the entire value of that car in the first year itself. I'm using it over 10 years. So assuming we will use it uniformly over 10 years, we will depreciate it 1 lakh each in all the years, correct. When I say depreciate, we will remove 1 lakh from asset and we will put it to P and L. Every year we will be removing 1 lakh and we will put it to P and L. Got it? So this is depreciation. Very quickly, I've told you what is depreciation. It is a reduction in our asset value over the useful life of the asset. So they have defined it. Depreciation is the systematic allocation of depreciable amount, okay, of an asset over its useful life. Systematic allocation. So you're removing the depreciable amount. How much we are removing? Systematically over the useful life, some amount we are removing and we are putting it to P and L. Okay. So depreciation is what? It's an expense. So depreciation is an expense. Expense how? You're removing the asset and treating it as expense. Got it? Okay. So we'll quickly see the methods of depreciation. Okay. So I have divided, so even the institute material has like many types, but we are dividing it into only 4 types. Okay, one is SLM, straight line method, WDV method, or reducing balance method, or written down value method. Okay, correct. WDV method, sum of years digits method. This is one useless method which is not used in real life anywhere. Okay, and last one is based on total capacity. I'm clubbing everything here: machine hour, production units, and depletion method in this last one based on total capacity. We'll quickly see the formulas and we will see quickly revise, correct. Now straight line method, what is this? That means here the depreciation amount is fixed, correct. What is fixed here? Depreciation amount is fixed in this method, straight line method. What is the formula for finding the depreciation amount? Depreciation amount is equal to what is the total cost of the asset minus the scrap value, which I told you should not depreciate it, minus scrap value, divided by useful life. So you will get a fixed amount. Okay, So this is a fixed amount you will get, which you will depreciate over the useful life of the asset. Okay, quickly we will see page number 5.11 of your ICI material, illustration 1. 5.11 illustration 1. Okay, it's ready. So this is the straight line method that I am discussing. Let's see this. So Jain Brothers acquired a machinery on 1st July 2021 at a cost of 14 lakhs. Correct? At a cost of 14 lakhs and spent 1 lakh on installation. Now, okay, I have to tell you one thing. The cost of the asset till you put to use, okay, whatever you have incurred on the cost of the asset, okay, while bringing the asset to put it to use, you will add it to the cost of the asset. Okay, one line, simple. So whatever, if suppose transportation cost you've incurred to bring the asset from the vendor to your factory and to install it, installation cost, all of these costs, whatever you've incurred, okay, which you can clearly identify which is for the asset, okay, you will add it to the cost of the asset. Very easy. Okay, so here they have clearly told cost of the asset is 14 lakhs and spent 1 lakh on installation. So that is for bringing the asset to use. Correct. Then the firm writes of depreciation at 10% on original cost every year. So when they say 10% on original cost, that means they are telling it's a fixed amount. They are not telling 10% on the balance of the set, on written down value. No, they're telling on original cost. The original cost is 10 lakhs. If I multiply 10%, I'll get 1 lakh. Next year, again, I should do the same thing, right? 10% into original cost, 1 lakh. So the amount is fixed. When you know the amount is fixed, which method is it? It is straight line method. Correct? Correct. So we will see here what is happening. Machinery account, when I purchased 14 lakhs debit, this is debit balance, this is credit balance, these are all basics you would have covered already. So machinery account debit, I am increasing the asset value, increasing by debiting. Assets will be increased in value by debiting, assets will be decreased in value by crediting. Okay, these are all the basics I am telling you. So 14 lakhs, 1 lakh, so this increased my asset value. Correct. Now after 1 year, on 31st December 21, what I'll do, it's not 1 year, that is 6 months. Okay, after 6 months, I will provide depreciation for 6 months on 15 lakhs at 10% on the original cost. So original cost is how much? That is 15 lakhs. 15 lakhs into 10%, 1 lakh 50. But I've used the asset only for half the year. So that is 75,000 depreciation for the first year. Okay. Now next year, what is happening? To balance brought down will be 14 lakh 25 after providing 75,000 depreciation. Then depreciation amount for the second year will be, I told you, fixed amount on the original cost, that is 1 lakh 50. Here we are providing depreciation for entire year, so the depreciation is 1 lakh 50. So on it will go. So every year depreciation will be 1.5 lakhs only for first year. Now don't come first year, why is it 75,000? Sir, you told me depreciation amount it should not change. See, here it is only for 6 months we are providing depreciation. That is why we are giving 75,000 as depreciation. Did you understand? So next year onwards, the amount of depreciation will not change. It will be 1 lakh 50 only. So this is how you should present your machinery account, where date particulars amount will be used, and date will be written first, and purchases, it will be debited to your machinery account. It will increase the value of the asset by debiting. Then depreciation on the credit side, you will put by depreciation 10% of 15 lakhs for the first year. If it was full year, it would have been 1 lakh 50 only. Because it is less than 1 year, it is 75,000. Okay, clear. Now if you see depreciation amount to machinery 75,000, then where will this depreciation be transferred? It will be transferred to P&L account by profit and loss, 75,000. This, why P&L? I told you it is an expense. Correct. Reducing the value of the asset. If you see here, asset is increasing 15 lakhs, but every year we will reduce the value, keep reducing the value, keep reducing the value. Correct. So if you see, after 2 years, the asset value is 12 lakh 75. How did we reduce? We reduced by depreciating it. Okay, quickly. So this was your SLM method. Okay, we'll quickly see what is WDV method. Okay, without wasting any time. So what is WDV? Here the depreciation amount is not fixed, but the depreciation rate is fixed. What is fixed? Fixed percentage. So depreciation rate is fixed. Correct. Depreciation amount is fixed, SLM method. Depreciation rate is fixed, WDV method, very easy. So what you'll do, you will take the cost of the asset, you will take the percentage which is fixed, which is already given to you in the question, multiply this amount, you will get the depreciation amount. Now again, this depreciation amount you should provide it for the period of use in that accounting period. Suppose first year you've used only for 4 months, you will provide depreciation only for 4 months. If you have used for entire year, you will provide depreciation for entire year. Okay, very easy. We'll quickly see illustration 5.11. And also this is reducing balance. So I told you rate is fixed, correct? So first year you will provide depreciation. After that, whatever is the balance available in that asset account, on that balance you will you will apply this rate and find the depreciation for next year. Okay, we will see this example quickly. Okay, so reducing balance method also is nothing but written down value method, correct? So Jain Brothers, same example, 15 lakhs only. Okay, so 15 lakhs only is the cost of the asset, because 14 lakhs plus 1 lakh. So if you see, cost of the asset is 15 lakhs. Now depreciation again, for first year it will be 10% is the fixed rate that they have told. See how to identify whether it is written down value or it is straight line method. See this question. The firm writes off depreciation at 10% every year. They did not tell 10% of original cost. If they had told 10% of original cost, then that will be SLM method, correct? If they have told 10% every year, then this is WDV method. Are you understanding the key difference here? Okay, quickly. So let's not waste time. Okay, quickly. Are you getting the key difference here? Okay, the books are closed on 31st December every year. We will see this. Okay, I told you 10%, so 75,000. Now what is the balance? 14 lakh 25,000. Now 14 lakh 25,000 is the balance. Now will you provide depreciation at 1 lakh 50? Amount is not fixed, sir. Amount is not fixed. This is WTV method. We clearly understood. So what is the depreciation? Depreciation will be 14 lakh, whatever is the balance. On this balance, you will apply the fixed rate. So 10%. For 1 lakh 42,500 will be the depreciation, and your balance carried down will be 12 lakh 82,500. If you see the key difference here, see here between the first SLM method and this method. SLM method, what happened? The depreciation amount was 1 lakh 50. It will be 1 lakh 50 for each year. Okay, but here it will be changing. The rate will be fixed at 10%. Okay, quickly we will go. Okay, the next method, we will go to the next method, that is sum of years digits method. This is one stupid method, but still you need to learn, because nowhere in real life we are, as chartered accountants or any accountants, we are not using this method, but still it is there in your exam. If at all it comes, you will have to write the answer. So we will quickly learn how it is solved. Okay, so here again, sum of years digits method. This is also one of the depreciation methods that you have. Now how to find? Now depreciation amount is equal to how much depreciation you need to provide each year. Okay, to find that, whatever is the depreciable amount, okay, after reducing the scrap value, multiply that by remaining useful life including current year. Okay, remaining useful life including current year. So that means in the first year, you will not, remaining useful life is not 9 years. After 1 year, suppose if the asset is like 10 years useful life, and after 1 year, what is the remaining useful life? It is 9 years, correct? Simple. But you will write 10 here. Remaining useful life is 9 including current year, that is the first year. So it will be total 10 divided by n into n plus 1 whole divided by 2. So what is n here? Estimated useful life. I told you 10. So 10 into 10 plus 1 is 11 divided by 2. That will give you 55. Okay, we'll quickly see this illustration, which is illustration 3. If you see this problem, you will understand how to solve it, and you might find other problems elsewhere. Just solve a few problems. You will be done with this method. Okay, you should solve for SLM WTV also. Okay, quickly we will see this illustration 5.13 page number. Okay, 5.13. Okay, now they tell Messrs Akash and Co purchased a machine for how much? They purchased a machine for 10 lakhs. Okay, estimated useful life and scrap value were 10 years. Okay, at 10 years is the useful life. What is the scrap value? Scrap value is 1,20,000. So what is the depreciable amount? I told you depreciable amount is 10 lakhs minus 1.2 lakh, that will give you 8.8 lakh, correct? What is the formula? I told you 8.8 lakhs, that is the depreciable amount, multiplied by remaining useful life including current year, whole divided by n into n plus 1 divided by 2, correct? So what are they telling? The machine was put to use in 1st January 2017. Okay, show the machinery account and depreciation account in the books for, oh, not for 2018, they're asking for 22. Okay, they're asking you to provide the depreciation for 22, correct, using the sum of years digits method. Now I have quickly solved, I have solved and kept so that we will not waste time in solving. I will show you how to solve this problem. Okay, don't get confused of what they have done. Okay, if you see here, if you see the question and if you see the answer here, they have put this formula. What is this? We are not understanding that formula is something different. What is this? Okay, don't get confused, it's very easy. Okay, so okay, what they have told, we bought the asset for how much? 10 lakhs. Okay, minus 1.2 lakhs is the scrap value. So what is the depreciable amount? Depreciable amount is 8 lakh 80. So in which year we bought? We bought in 2017, that to 1st January, correct? The ulta, sir, we are not in America, sir. Okay, 1st January 17. Now you should provide depreciation for 17, 18, 19, 20 and 21 to arrive at what is the balance, opening balance for 22, correct? Very easy. So first provide depreciation for 2017. What is the formula? Depreciable amount multiplied by remaining useful life after 2017. Remaining useful life is 9 years, but including current year. That is one thing you need to keep in mind, including current year. So remaining useful life including current year will be 10, correct? After 1 year it will be 10. Then the whole divided by useful life into useful life plus 1, n into n plus 1 divided by 2. So 10 into 10 plus 1, that is 11, divided by 2. So 10 divided by 55, this if you solve you will get 55, and 10 divided by 55 into 8.8 lakhs, you should get 1.6 lakhs. This is depreciation for 2017. Similarly, if you go to 2018, 8.8 lakh into, now remaining useful life including current year, that will be 9 divided by 55, you should get 1.44 lakhs. Like that, if you solve for 2019, 20, 21, you should get these depreciation amounts. Now if you add all these depreciation amounts, you should get total depreciation of 6.4 lakhs, correct? This 6.4 lakhs, you reduce it from the asset value, you should get 3.6 lakhs as the opening balance for 2022, correct? This is the opening balance for which year? 2022. Now for 2022, what will be the depreciation? Simple, 8,80,000 multiplied by how many years remaining? 4 years remaining including current year, 5, divided by 55, 10 into 11 divided by 255, you should get 80,000 as depreciation. Okay, so this will be the depreciation amount for 22, correct? Now if you see the depreciation account that they have prepared, okay, you will get an idea. Okay, so what did we tell? We told you 6.4 lakh is the total depreciation, correct? 6.4 lakh. If you minus that, you should get 3,60,000. This will be your balance brought down of the asset after total asset minus depreciation. You should get 3,60,000. Then depreciation for current year we found out that is 80,000. So 3,60,000 minus 80, your closing balance should be 2,80,000. So this is for which year? Machinery account for 2022, correct? So this is only sum of years digits method. What is important in this problem, in this method, is you should remember the formula. That's it. So the formula is very simple. Okay, which I have written. You can take us. I will this whatever notes I have prepared here. This will be available in the description. You can download and quickly revise this chapter. Don't worry. Okay, we'll finish without wasting time. Let's not waste any time. So sum of years digit, quick revision, depreciable amount multiplied by remaining useful life including the current year divided by n into n plus 1 divided by 2. That's all, over. If you remember this formula, you will solve this problem. And you should be careful in reading the question, which year we purchased, which year they're asking the depreciation account for, which year they're asking the machinery or the asset account for. Okay, that if you see, then it will be very simple. Provide depreciation for all the years and find out the opening balance, and after you find out the opening balance, prepare the account. That's it. Okay, next method, capacity based. Now what is capacity based? I told you I've clubbed everything. Machiners, suppose quickly, you have bought a machine. Okay, this machine, it will come for 1 lakh labor hours. That means 1 lakh hours you can use this machine, or it will come for 1 lakh producers. That means 1 lakh products you can produce. That's it. Or you have bought one mining quarry, okay, where those stones are mined, correct? This will come for 1 lakh tons. 1 lakh tons of stone you can mine over there. Okay, so these are the examples. So these are the different. So for quickly simple, what is the depreciation amount? Okay, so what is the depreciable amount, or what is the total cost that you have incurred? Okay, that is the asset you have purchased, that is a machine or something that you have purchased. That will be your total cost multiplied by what is the capacity that you have used in this year, divided by what is the total capacity. Very easy, simple. So what is the capacity you used in this year divided by total capacity multiplied by the depreciable amount of that asset. Depreciable amount, I told you again and again, I'm repeating, total cost minus the scrap value, that will be your depreciable amount. So the depreciable amount multiplied by what is the capacity you've used in this year divided by total capacity, that means machine hours. Suppose total 1 lakh hours it will come. I've used 5,000 hours in this year, correct? So how much should I depreciate? I should depreciate 5,000 divided by 1 lakh into the total machine hour, into the depreciable amount that I'll get the depreciation to be provided for this year. Suppose if it is on products, I can produce total 1 lakh products using this machine. What I've done, I've used 25,000 products I've produced this year. So how much I should depreciate this machinery? 25,000 divided by 1 lakh into the total machinery cost. That is a depreciable amount. Got it? So very simple. So remember this formula, capacity used divided by total capacity multiplied by depreciable amount. So in this machine hour, okay, machine hour or labor or depletion method, everything will covered in this capacity based. Very, very simple, very, very easy. Quickly we will go to the next topic. Okay. So quickly, so what is the next topic? Profit or loss on sale of fixed assets. Now, depreciable assets, you're providing depreciation, okay, but you might sell this asset in between, correct? This asset can be sold in between. Now, if you're trying to sell this asset, how to prepare this account, how to calculate this profit or loss? Okay, it's very, very easy. You just have to see now. Okay, so now again, we will see first what is the journal entry that you will pass for providing depreciation. Okay, there is two methods. One, provision for depreciation. Now what is this provision for depreciation? Okay, is not maintained or provision depreciation is maintained. Okay, so just imagine, now I bought a asset for 10 lakh rupees. I provided depreciation 1 lakh each year. After 3 years, if I see my books of accounts, what should be the asset value? It should be 7 lakhs. Simple, it should be 7 lakh rupees. Now if I open my balance sheet and check, my balance sheet will show my asset value is 7 lakhs. Okay, good. It's correct amount, no problem. Now I want to know what is the total cost of the asset and how much depreciation I have provided. Okay, can I see the balance sheet and understand how much depreciation I've already provided? Because the asset value showing 7 lakhs, I don't know. I don't know how much I bought it for. 3 years back, how much you bought it for, maybe you have forgotten. Correct? If it's only one asset, you will get to know. But if you have 100 assets, how you'll get to know how much we bought it for, how much depreciation we have provided. To know this, to know how much depreciation and to know what was the original cost of the asset, what we will do is, we will, instead of reducing the asset, every time we provide depreciation, we will create a separate account called provision for depreciation or accumulated depreciation account. Okay, these are the one and the same. Accumulated depreciation or provision for depreciation, these are one and the same. So what we will do, you see the journal entry how it is passed. So if it is not maintained, that provision for depreciation is not maintained, you will say depreciation account debit, that is an expense, so you are debiting and you are reducing the asset. Okay, I told you in the beginning, asset is reduced, so asset is reduced, you are reducing the asset immediately. We are not maintaining provision for depreciation, correct? Whereas if you maintain provision for depreciation, this entry will change a bit. Depreciation account debit will remain same because that is an expense that has to be debited, that will not change. But what will change is you will not reduce the asset. Instead, you will credit something called provision for depreciation account. Okay, you will credit something called provision for depreciation account. You got it, very simple. Let's go next. So how is it presented? If you take any machinery account or any asset account, when you buy the asset to bank 1 lakh rupees, you bought it, correct? Now you are depreciating. You depreciated for the first year. If you are preparing in this method where provision for depreciation is not maintained, depreciation will be provided in the same account, that is asset is reduced. Asset is reduced by 10,000 rupees. What is the balance of the asset? Balance of the asset is 90,000. So this balance will be transferred to balance sheet on the asset side, 90,000 like this. Got it? Whereas we will see what is in this method where we are creating provision for depreciation, asset account, you will say I bought it for 1 lakh. Depreciation, I will not provide it here. I will not reduce the asset. I will keep the asset at 1 lakh only. I'll keep the asset at 1 lakh only. It will be 1 lakh. But I said I'll credit the provision for depreciation account in my second journal entry. When I pass this journal entry, okay, my provision for depreciation account will be credited on the credit side 10,000 rupees. Correct? So if you see here, balance sheet, 1 lakh rupees will come to asset, and whatever this 10,000 balance carried down is there, that will not go to credit side, that will not go to liability side. Instead, it will be reduced from the asset. It will be reduced from the asset, and my balance will show at 90,000. Now, as a reader of financial statements, you take the financial statements to your hand, and if you see balance sheet, okay, asset 90,000, okay, good. Here also balance sheet, asset is 90,000 only, but I will get more information here. If you see, more information I'm getting. What is the more information that I'm getting? Asset is what I purchased for 1 lakh. Then the depreciation that I have provided till now is 10,000. So asset value is 90,000 as on date. Okay, did you understand the clear difference why we maintain provision for depreciation in some cases and why we do not maintain in some cases? If you do not want to maintain, it's nothing wrong, you don't maintain. The asset will be shown in the balance sheet direct figures. Okay, but what you need to do, if you want to know how much is the cost, you have to go to the date of purchase and check. Okay, but if you don't want to do that, if you want to know the cost of the asset and you want to know how much depreciation we have provided over time, what you will do is you will do this provision for depreciation account method, and you will pass this journal entry, and extra account will come, that is provision for depreciation account, and balance sheet will be presented in this fashion. Okay, clear? Got it? Now, why did we discuss all this? Okay, our topic of discussion was profit or loss on sale of fixed assets. Why did we discuss all this? Because profit or loss on sale of fixed assets, you will have to calculate in two different methods, if you, depending on whether you have created provision for depreciation or not. Okay, so let's go quickly into it. So if you have not created provision for depreciation, whatever sale entry, okay, you will pass in the same asset account. Okay, if you have created provision for depreciation account, what you will do is you will transfer the balance of the asset, and you will transfer the balance of the depreciation of that particular asset to a new account called disposal account, asset disposal account. Okay, so what you will do, again, first in the if you have not created provision for depreciation, pass sale entry in that same account. Simple, clear, over, kel khatam. But if you have created provision for depreciation, what you will do is you will transfer the asset balance and you will transfer the depreciation balance of that particular asset which you are selling to a new account called machinery asset disposal account. Okay, now this disposal account will become that asset account. Are you getting it? This disposal account will become that particular asset account, and in that account you will pass the sale entry and find out what is the profit or loss. Okay, and always remember what you should do is, in the year of sale, suppose you will not sell it on the first day only, or you will not sell it on the last day only, you can sell it in between also, correct? So when you sell it in between, till the period that you have used in that particular year, you will provide depreciation on that particular asset. Very easy and simple, correct? So, and don't get confused again. Now disposal account, usually it is prepared only when we have provision for depreciation account. Sometimes your ICA, brilliant ICA, will tell you to prepare machinery account even though there is no provision for depreciation account. That means we are following the first method where machinery account is there. In that only we are providing depreciation, we are reducing the asset value. Okay, but ICI will come up and tell you prepare machinery disposal account for this particular entity. Okay, then you should not get confused. Okay, don't panic, just prepare it. It's very easy. Transfer the balance of asset and provide depreciation and calculate the profit. Okay, very easy. You will, there is a illustration 9. If you see that, you will understand. Okay, so again I'll repeat, if you are preparing disposal account, transfer the asset balance to disposal account, transfer the depreciation balance, that is the provision for depreciation account, whatever balance is there in that account, to the disposal account, and you calculate the profit or loss. We will see couple of illustrations 7 and 8. You will understand how it is done. Okay, then we will see the other topics quickly. Okay, sir, let's go, sir. Let's not waste any time, sir. We got it, sir. Illustration 7. Okay, this, see, I told you production method, depletion method. You solve these problems, you will understand. Okay, you solve some previous year questions also. It's very easy. It will be done in no time. Okay, so illustration 7. Let's read the question quickly. A firm purchased on 1st January 2020 certain machinery for 5,82,000, spent 18,000 on its erection. That means installation. Okay, so 18,000. What is the total value of my purchase? Now it becomes 6 lakhs. On 1st July, that means after how much? After 6 months, another machinery for 2 lakhs was purchased or acquired. On 1st July 2021, that is 1 year later, the machinery purchased on 1st January, that means this one, okay, has become obsolete and was auctioned for 3 lakh 86. On the same date, fresh machinery was purchased for 4 lakh. Don't worry. Okay, if you are getting confused with all of this, just put one timeline like this. Okay, then you will easily solve it. First day, what did we do? It was 1st January 2020. What did we do? We bought something for 6 lakhs, correct? Then on 1st July 2020, another machinery we bought for how much? 2 lakhs, correct? On 1st July 2021, the machinery, see again, now here year end 31st December, here you should provide depreciation for both the assets. After that, they are telling here 1st July 21, they are telling this asset, okay, suppose this is A, okay, this A asset became obsolete and we sold it for 3,86,000. Eraser, I want eraser. We sold it for 3,86,000, correct? A machinery. That is what they're telling. On the same date, again, what they're telling, they purchased for 4 lakhs. Okay. Now they're telling depreciation was provided annually at, on 31st December at the rate of 10% on written down value. WDV method, easy. So 31st December, again it came. This is 21. Okay. So if you put this timeline, it will be very easy for you to find out. Okay. So I was telling you, So I was telling you that if you put this timeline, it will be very easy for you to solve the problem. Okay, so what did they tell? We bought on 1st January 2020 asset for 5,82,000, and for installation we spent 18,000. See, asset value, increase the asset value in your books of accounts by debiting the machinery account, correct? So that will be 5,82,000 and 18,000. Okay, then the same year, see, in the same accounting period, what I did, I purchased one more asset on 1st July. Okay, see, 1st July to bank, increase the asset value, so 2 lakh rupees, correct? So let's assume this is machinery A, that what we have written here, correct? Now what will be the depreciation? So if you calculate depreciation, what have they told on WDV method? So 6 lakhs, for 6 lakhs my depreciation will be 6 lakhs multiplied by 10%, okay, it will be 60,000. And there will be one more asset which I bought for 2 lakh rupees. For this, should I provide depreciation for entire year? No, I bought it only in 1st July, so I'll provide depreciation only for 6 months, correct? So that 2 lakh into 10% will be 20,000, but for 6 months, so it will be 10,000. So this 70,000 is nothing but 60,000 plus 10,000. Did you get it? Okay, simple. So what is my balance carried down? My balance carried down is 7 lakh 30. So are we preparing provision for depreciation account here? No, we are not preparing provision for depreciation account. So my depreciation is credited to my asset account only. It is not credited to provision for depreciation account. Got it? Okay, next. My opening balance for next year, that is 2021, will be 7 lakh 30, correct? Now, what did I do? Let's see our timeline. My opening balance is 7 lakh 30 here. Now, on this year, on 1st July, I sold one asset and I bought one asset on the same date, correct? So, what did I tell you? When I just now I told you, right? Whenever you're selling that asset in the middle of the year, provide depreciation till the time you use that asset in that year. Okay, when did we sell? On 1st July. So 6 months depreciation you provide it. Very easy, simple. So depreciation on sold machine 27,000. How did we find? So see here, calculate depreciation separately. First 6 lakhs you bought it. How much did I depreciate that asset for? 60,000. So what is the balance of that asset? 5 lakh 40. On this asset, I will provide depreciation at 10%, correct? Okay, but for how many? But only for 6 months. So if I calculate 5 lakh 40,000 into 10% will be 54,000, but only for 6 months. So that will come to 27,000. Did you get it? How did we get this 27,000 as depreciation? So very easy, right? So for this machinery A, if you see in this balance of this machinery A, there is only 5 lakh 40. This 7 lakh 30 includes balance of this new asset also, but our old machinery A is 5 lakh 40. Correct. Now that's a 5 lakh 40 asset, whatever is there, it is sitting here in this 7 lakh 30. Correct. Now that depreciation you should provide, how much you will provide? 10%. 10% is how much? 54,000, but only for 6 months, so that will be 27,000. Correct. Easy. Now how much we sold it for? How much they have told? We have sold it for auction for 3 lakh 86. Correct. You auctioned it for 3 lakh 86 by bank, that same machinery account. Okay, but you are selling that asset for 3 lakh 86,000. So if you see now, that value of that machinery, if you calculate 5 lakh 40,000 minus depreciation for the year of sale, I will get a value of 5 lakh 40,000 minus 27,000, that should be 5 lakh 13,000, correct? But how much did I sell it for? I sold it for 3 lakh 86,000. So when I sold it for only 3 lakh 86,000, okay, what is the loss I'm incurring? I'm incurring a loss of 1 lakh 27,000. Okay, I sold it for sale for 3 lakh 86, but I have incurred a loss of 1 lakh 27,000. So by P and L, machinery account will be credited by the loss. Okay, so 1,27,000 is my loss for the year. So P&L debit to machinery 1,27,000 rupees. Did you understand? Okay. So on the same date, they are telling we bought one more. If you see the timeline, very simple. If you see the timeline here, what have we told here? We bought one more asset. So if you name this asset as B, and if you name this asset as C, okay. So now after we sold this asset, immediately there is only one asset left, that is asset B. Okay. Now if you see, we are acquiring one more asset, that is asset C. This was asset B, correct? Now this two bank account 4 lakh is the asset that we have acquired, correct? So now if you provide depreciation on what all assets you have to provide, check, see here. So in this balance, what was the balance of asset B? Asset B, we had provided a depreciation of 10,000. So in this balance, the remaining balance, we had a asset B balance of 1,90,000. Do you agree? Okay. Asset B balance of 1,90,000. Correct. Now you will provide depreciation for asset B. For asset B, 1,90,000. You will provide 10% depreciation, that is 19,000. Easy. Now asset C, when did we buy? Only 6 months. We are providing only for 6 months. So it is 4 lakh asset. 4 lakh asset into 10%. But how many? Only 6 months. So that will come to how much? Only 20,000. Correct. So put together my depreciation should be 39,000. So that is my 39,000 here. Did you understand? Did you understand? Very simple. So if you put a timeline like this, okay, this timeline can be horizontal or it can be vertical. It's one and the same. Okay, but you should mandatorily put a timeline for each question so that it will become easy for you to solve. Just name the assets. They would sometimes, the question only will tell you what kind of asset it is. If they would only named the asset, that will become easier. Otherwise you name the asset A, B, C. It's not very difficult, and you calculate the depreciation separately for each asset, then you will get the total depreciation amount. Okay, so how to get the depreciation amount for each year? Just calculate the depreciation separately for each asset. Okay, then you will get the total depreciation amount. So again, quickly we will revise. So 1st January, what they told, we bought one asset A. Then 1st July, we bought one more asset B. Then 31st July, 31st December, sorry, we are depreciating for both the assets, correct? A and B. So A, how much depreciation? We calculated it is 60,000, correct? And B, how much depreciation? 10,000. That is the 70,000 we got, correct? So in this balance carried down, we have both the assets A and B. Now if I calculate depreciation, and then I will tell on 1st July they are selling asset A. So calculate depreciation for A separately, I told you. So I told you 66 lakhs we bought, 60,000 is the depreciation for the first year. So what is the balance? 5,40,000. Then 10% for that year till we sold. So only 6 months. If you minus that, you will get 27,000 as a depreciation. Very easy. So 10% depreciation will be 27,000 rupees for 6 months. Then we sold it for 3,86,000. Then now you got to know that asset which was 5,40,000 minus the depreciation, your balance is 5,13,000. Correct? Then if you sell it for less than 5,13,000, there will be a loss. Suppose if you had sold it for 6 lakhs, if you had sold it for 5,50,000 instead of 3,86,000, you would have had a profit. And instead of writing P&L on this side, you would have written it here on the debit side. That means asset, you are increasing the value of asset. Correct? Got it? So then where were we? So P&L is done, profit and loss. Now we have to calculate depreciation on 35. Then there was one more asset C acquired, correct? And you have to calculate depreciation at the end of the year. I told you, calculate depreciation for each asset separately. Okay, this is the easiest method. Okay, in the timeline you check. Now if you see, what is my balance of B? My balance of B was 1,90,000 here. Okay, so you will provide 19,000 depreciation for B, and there is C which is purchased, that is 4 lakhs, but you will provide 6 months depreciation, that will be 20,000, that will be 39,000. Okay, so I've discussed one problem with you. So other problems you solve it this way, just put a timeline and calculate depreciation separately for each asset, you'll get the answer. Okay. uh, uh, Also, again note, if you have any difficulty in any exam question, just put it in the comment section. I will solve it for you and I will clear your doubts. Okay, don't worry. Okay, see, they have our timeline was like this. They have also prepared a horizon. This method you can use. This working note, if you see here, okay, you use this working note format in your exam. It will be very simple and easy. Okay, see, this illustration 7 working note format is it. See, we named it A, B and C. They have named it 1, 2 and 3. Okay, it's one and the same. It's very easy. Okay, you prepare this working note like this. Cost when you purchased minus depreciation for the first year, you will have the opening balances. Then depreciation for the second year, you will have the opening balance for the third year. Then you will have in this case it is sale proceeds. Okay, if you have sale proceeds in other assets also, you can write it over there. Okay, you can use this working note style and easily you can solve the problems. Okay, now quickly we will see another illustration. Okay, in this case where there is provision for depreciation, and in cases where there is no provision for depreciation. Okay, so on 1st April 2019, okay, quickly bring out the timeline. On 1st April, purchased a machinery for 12 lakhs. Okay, then on October, this is 19, 1st April 19, you purchased for 12 lakhs. On 1st October, so 20 is done. 31st March 20 is done. Okay, 31st March 21 also is done. Then you are telling October 1st, after 6 months. Okay, 1st October 21, they are telling a part of the machinery that was purchased here. Okay, so this machinery is A, which you purchased, you have sold it for, what is it, a part of the machinery that was purchased. Okay, in this 12 lakhs they are telling there is other parts also. Okay, so this so they are telling us whatever they bought, this has two machineries. One is 80,000, and the rest, okay, the rest is 11 lakh 20,000. Correct? Okay, the machinery that was purchased for 80,000 was sold for 45,000, and the new machinery at the cost of 1 lakh 58 was purchased and installed on the same date. The company has adopted providing depreciation and WDV at fixed rate of 10%. Show the necessary ledger accounts for the year ended 2020 to 2022. Okay, so that is the timeline that we have anyways prepared. So we will quickly see. So you see this solution. Provision for depreciation is not maintained, just like the previous one. We will see this. It's very simple. So here again, you can keep it as two different assets, and we will calculate that working note should be there. If they have not prepared also, you can prepare one. Okay, they have not prepared, but still you can prepare it in this fashion. Okay, so machinery A, machinery B, this will be 80,000 and this will be 11 lakh 20,000. Okay, like that you can prepare the machinery working note. So to bank 12 lakhs, by depreciation it will be 1 lakh 20, and by balance will be 10 lakh 80, 10 lakh 80 brought forward, and 10% fixed amount on 10 lakh 80 will be 1 lakh 8,000. Okay, then we go to 2021, your balance will be 9 lakh 72. Then what we do is, you are selling the asset, okay, which was bought for 80,000. Now again, our method, just calculate what is the depreciation. How much depreciation? 2 years depreciation we have provided. First year it will be 8,000. Correct, there will be 72,000 balance. Second year it will be 7,200. What will be the balance left? 72,000 minus 7,200 should be 64,800. Correct. 64,800 is the balance of the asset. Now, what are they telling? They are telling we sold it on 1st October 2021 for 45,000. Again, 6 months depreciation you should provide. So, into 10% minus divide by 2. So, depreciation will be 3,240. Correct. Now, if I minus that, I should get 61,560 as my balance. Correct. Now, how much am I selling it for? I'm selling it only for 45,000. So, there is a loss. How much is the loss? 61,560 minus 45,000. My loss will be 16,560. So, that is this loss here. How did we get it? Again, simple. I'm telling it fast because this is a revision video. But if you're solving this problem, you should solve it slowly and understand. Okay, how I told you, calculate the depreciation separately always for the asset that is sold. You will get it easily. Don't get confused too much. So asset what we sold, they told us we have bought it for 80,000. 80,000 is the asset cost minus 8,000 first year depreciation. Then second year depreciation 72,000. Then third year only 6 months depreciation 3,240. If you minus, this is the balance of the asset. If that balance of the asset minus the sale value, you should get the loss or profit. Correct. If you are sold for more, you have profit. If you are sold for less, it's a loss. Correct. That's 16,560 and see the depreciation 3,240. Now they tell us we bought one more asset for 1,58,000. Now the depreciation you will provide for that year, again, how did I tell you? Calculate separately. So first we bought one asset for 11,20,000. What is this 11,20,000? In the 12,80,000 is separate, 11,20,000 is separate. Correct. In this 11,20,000, first year depreciation is 1,12,000. Correct. 1,12,000. If you minus from 11,20,000, you should get 10,08,000. Correct. This is Y1. So 10,08,000. If you minus depreciation for second year, you should get 1,08,000, 1,08,000 as the depreciation amount, and your balance should be 9,07,200. Okay, this is after the second year. Now for the third year, your depreciation will be 90,720. So in this depreciation, 90,720 will be your first asset. Now second asset, when did we buy? We bought it after 6 months. So 1,58,000. So that will be 1,58,000 into 10% will be for full year, divided by 2 will be for 6 months. 7,900 should be your depreciation for the half year. So total if you add, it should be 98,620. Did you get it? Depreciation, simple. Calculate individually for each asset. Then you will have no confusion at all. So you can calculate using, I told you this same thing we are doing. See, if you see what I am doing here is nothing but this working note. I am adding the cost, I am reducing depreciation each year, and I am calculating what is the depreciation for that particular year. Got it? This way you can calculate depreciation for each asset. Okay. Okay. So the next type, same question, we will see if provision for depreciation account is created. So this one little slowly I will tell, but this is because many of them will have confusion in this, but it's one and the same. Basic rule, put the timeline, and the other thing that you need to remember is whatever depreciation you're calculating, that depreciation you should separately calculate for each individual asset to find out what is the depreciation at the time of sale and what is the depreciation you're providing for each year. Got it? Okay, so we will go ahead. Now I told you machinery account when you prepare, depreciation entries when you're passing, depreciation if you debit, you will not credit the asset. Instead, you will credit something called provision for depreciation account. Why do we do this? I have explained already. Come, let's go. So here, if you see machinery account, so when we bought the machinery for 12 lakhs, that is, there were two assets, 11,20,000 and 80,000. You can mention it separately also, or you can keep it together. So here, what they have done, if you see, they have mentioned 12 lakh rupees. Correct? Now, after 1 year, what are we doing? We are providing depreciation, correct, on this 12 lakh asset. Should you provide depreciation in the same account? No. Why? Because we are creating a separate account called provision for depreciation. So my balance carried down will be 12 lakhs only. Did you understand? So if you see here, in that year I will provide depreciation on that 12 lakh asset. How much depreciation? 1,20,000. Correct? That provision for depreciation will be separately maintained as 1,20,000. Now that year my balance carried down was 12 lakhs. Here my balance carried down will be 1,20,000, and balance brought down for asset will be 12 lakhs, and balance brought down for my provision for depreciation will be 1,20,000. Second year, what is the depreciation we are providing? What is the balance of asset? If you see, 12 lakh minus 1 lakh 20, my asset balance is 10 lakh 80. Same, it is same as this previous. Okay, depreciation amounts also won't change, asset value also will not change, only method of presentation will change. Okay, a separate account will come and method of presentation will only change. Okay, so my asset balance is 12 lakhs minus 1 lakh 20, total value of asset is 10 lakh 80. On that, if I provide depreciation, my depreciation will be 1 lakh 8,000. Correct? So I will provide a depreciation of 1 lakh 8,000. Correct? All this you have to calculate separately. I'm not doing it here. Of course, this is a revision video. If this was a full-fledged class, I would have prepared the working note and I would have shown you. Okay, so this 1 lakh 8,000. So what is the balance of my depreciation? That is 2 lakh 28,000. Did you get it? But my asset balance will be 12 lakhs only. Why? Because I have not sold yet. So my asset value will be 12 lakhs only. I am not reducing my asset value by depreciating. I am creating a separate account called provision for depreciation. Now 2 lakh 28,000. Now balance brought down will be 2 lakh 28,000. But in the third year, what is happening? One of the asset which I bought for 80,000, I am selling it off. Correct? So what is the first rule? Provide depreciation till the date of sale. Correct? What is that asset? Again, we have seen this calculation here only it is. So in 80,000, we gave depreciation 8,000, 7,200 for second year. For third year, till the date of sale, what was the depreciation? 3,240. Okay, provide that depreciation on the date of sale. Where will you provide? Now don't provide it in machinery account. Machinery account you will not provide because we have created a separate account called provision for depreciation account. So depreciation account debit to provision for depreciation. The depreciation for that particular asset you will provide. Okay, on the date of sale, 3,240. Got it? Now what will happen? Okay, I told you, if you are creating provision for depreciation account, the way we will sell and record the sale entries is by transferring the asset which is sold to a separate account called machinery disposal account, and also we will transfer the depreciation balance of that asset to something called machinery disposal account. Very easy, it is very easy. Machinery account is there, total value of machines are there, all machines are sitting there. You transfer only that machine which is sold to machinery disposal account. Now just see, in this balance brought down, we'll take a separate color. Which color? We'll take this green. Okay, in this 12 lakhs, we have value of asset which is 80,000. Okay, that 80,000, send it off to disposal account. Remove it from this machinery account and send it to disposal account. We are disposing it off, so send it to disposal account. Correct? So machinery disposal account will be credited in the machinery account for 80,000. So that machine which you are selling at its original cost, you remove it from your machinery. So balance of that machinery from your asset, 80,000 you will remove. Okay, remove how? Removing asset means you have to credit that asset. So credit that asset for 80,000. This color is not good. Okay, now the depreciation balance of that particular asset also you remove from the provision for depreciation account and send it to disposal account. Very easy, simple. So in this provision for depreciation account, I have total balances, correct, of all the assets, the depreciation balance of all the assets, but I have to identify the depreciation balance of that particular asset which we are selling, and we have to remove from the total depreciation balance and send it to disposal account. Very easy. Now we will identify. How did we find? See, what is the depreciation? I told you first year we would have provided 88,000, second year we would have provided 7,200, third year till the date of sale 3,240. Add this up. So 8,000 plus 7,200 plus 3,240. If you add, you will get 18,440. So 18,440 is the depreciation amount of that particular asset, correct, which you are selling. So you remove the provision for depreciation balance of 18,440, send it to disposal account. How will you do it? See here, what was the balance? 2,28,000. In this, how much is relating to that particular asset? 18,440. You remove from this and debited. Okay. Now, if you see the magic here, okay, machinery disposal account. Okay, so this is not machinery disposal, this is machinery account. Okay, make that correction in your books. This is not machinery disposal account, this is machinery account. Okay, so from machinery account, how much did I get? Check here. I removed and I sent it to machinery disposal. I got 80,000. Bring it here. Bring this 80,000 here. Okay, this 80,000 from machinery account. Then from provision for depreciation, how much did I bring? I brought 18,400. So now if you see 80,000 minus 18,440, you should get 61,560 as the asset balance. 80,000, 18,440. Now for 16,560 rupees of asset, I am selling it only for 45,000. So what is the meaning? My profit and loss, that means I have a loss of 16,560 rupees. Did you get it? I have a loss of 16,560 rupees because of selling this asset only for 45,000. So I bought a machinery for 80,000. I didn't buy a machinery for 80,000. I bought the machinery from machinery account to disposal account at 80,000, and provision for depreciation was 18,440. Then the balance, okay, of that asset is 16,560 on that date, but I've sold it for 45,000. So what is the loss? The loss is 16,560. So this separate account is prepared to find out the profit or loss, and you will calculate in this manner. So quickly, if you see the first method, you are providing depreciation in the same account, but still you will calculate depreciation separately. You will calculate depreciation separately, correct? Okay, and you will calculate how much depreciation we should provide, and also what is the balance of that asset which you are selling, and to find out the profit or loss. Okay, in the second method, you're creating a separate account called provision for depreciation account to provide depreciation. Asset balances will be constant, that means it will remain at its cost price. Okay, then we will sell the asset. When we sell the asset, okay, you will transfer the asset balance to disposal account, also the depreciation balance to disposal account, and later you will calculate the profit or loss. Simple, very easy. If you want detailed calculation, please comment in the comment section. We will make a detailed video, 1 hour video on how to calculate using the working notes. Okay, so that it will become very easy. Okay, this video is for those who have studied, who know how to do just a brush up. So I'm running quickly and finishing this topic for you. Did you get it? Okay. Okay, so we are done with the ninth question is also very good. It has three assets. The same thing, it has three assets. You go ahead and solve it yourself. Ninth illustration is very good. You will get a deep understanding of the topics. Okay. Next. Quickly, we will see the next topic, change in method of depreciation. So if the depreciation method, that means you are doing WDV. Now you want to SLM, or you are doing SLM. Now you want to WDV, or sum of years digits method. Okay, if you want to change like this, can you change? Yes, you can change. So what is the rule of depreciation? Rule of depreciation is every year you need to keep checking whether how I am depreciating my asset, is it correct or not? Okay, how I am depreciating my asset, whether it is correct or not. So if you keep checking, then you might understand, I am using SLM, boss, this is not correct. I should maybe use WDV, or I'm doing WDV. No, every year the value of the asset is reducing same fashion. So maybe I should do SLM. Okay, you might understand like this. So can you change? Yes, you can change. So what you should do when you change? Simple. From that day, okay, you do, suppose that the balance of asset after depreciating is 5 lakhs today, and if your ascertain useful life is 5 years from now, okay, and you think, no, we will do SLM for 5 years, you depreciate 5 lakhs, 1 lakh each, okay, or you want to WDV now, take the rate and multiply that balance, and from now you'll, so whatever you have done before, okay, don't remember that karma. Okay, till now if you have done WDV, okay, whatever is that balance, take that balance, do SLM from now. Okay, till now if you have done SLM and you want to WDV, take that balance, apply the rate and go forward. Don't look back. That's all, simple, over. This topic is done. We will quickly see illustration 5.24, then you will understand. Page number 5.24, illustration 10. Okay, this ninth question is very good. You can solve it, okay, and you will get the answer also. I'm sure. Okay, see here what they're telling. Messrs. Anshul and Co. commenced business on 1st January 2017. When they purchased plant at 7 lakh rupees, they purchased one plant. Okay, this is machinery A. They adopted a policy of charging depreciation at 15% per annum on diminishing, that means WDV, correct? Their purchases of plant have been, then they purchase one more B, and they purchase one more C, correct? Okay, now they're telling on 1st January 2021, it was decided to change the method and rate of depreciation to SLM. Okay. On this date, remaining useful life of asset was assessed as 6 years for all assets purchased before 21 with no scrap value, and 10 years for assets purchased on. So this asset you will give 10 years. These to A and B you will give 6 years. When? On 1st January 21. Okay, they are pretty clear about it. On 1st January 21, they are changing the method and they are telling this is how you will depreciate. Okay, we'll quickly see this, how they have calculated. So they are telling, see, you purchased one asset on 1st January 17 for 7 lakhs. That at least you provide depreciation. WDV method, they are telling 15%. Okay, that 15% depreciation, 1 lakh 5,000. Okay, this is the WDV. Now you bought one asset on 2018 1st January for 1 lakh 50. Okay, for this also you provide 15%, 15% on this. Okay, or for this also you'll provide 15%. Okay, total depreciation they've calculated here, that's not a problem. Now they're telling for third year till 2021 we need to go, correct? So again 15%. Like that, if you go here, you will get to WDV as on 2020, 31st December 2020. This is 31st December 2020. This is your WDV, that is the balance of the asset. Okay, now they're telling the old assets whichever we have, that is A and B, okay, that will have a useful life of 6 years. So WDV of 3,65,404 divided by 6 year, if you do, you will get 60,900 as the SLM depreciation. Okay, so this 92,119, if you divide by 6, you will get a SLM depreciation of 15,353. Okay, so this is not 15%. This is not 15%. This is divided by 6. Are you getting it? So till now we were doing WDV. Okay, now what we are doing is not WDV, we are doing SLM for 6 years. 6 years. That is useful life is 6 years. So this is the value of the asset you will take and divide by 6, and from here you will go. I told you, don't look back. Don't go to the beginning and start SLM from that date. No, you will take the balance and do SLM from that date. That's all, over. Okay. So this is how you will present the plant and equipment account, and this will be the total depreciation for that period. Okay, now there was one more asset that they bought on 1st January 21. So this asset, what is that? they are telling it will come for 10 years. So what will be the depreciation? This will be 20,000, correct? We told here that 20,000 plus 76,000. So if you add both, 96,253, that is the depreciation they are provided here. Very easy, very easy, simple. Over. This topic also is done, sir. Go to the next topic, sir. We'll quickly revise, sir. We are not wasting any time. Okay. Now, change in estimated useful life. Just like change in depreciation method, there is change in estimated life also. That means I'm using one asset. I thought it will come only for 5 years, but it is coming super wonderful. It is not going only. Okay, I'm assuming another 5 years it will come. Can I assume? Yeah, after 3 years, I'm feeling it will come for 5 more years. I had assumed total life is only 5 years, but now it is coming after 3 years. I feel it will come 5 more years. Did you get it? So there is a possibility. Or after 4 years of usage, which has a useful life of 10 years, you felt no, it will die in 2 years. That asset is not going to come for more than 2 years. Is it possible? It's possible. Again, just like change in method of depreciation, this also, if you have assessed that the useful life is not going to be so many years, from the day when you change the assessment, for you charge depreciation for the remaining useful life. That means don't go back, no karma, no looking back. Whatever is the balance of asset on that particular day, that balance you will depreciate over the remaining useful life. That's all. Clear? Balance on the date that you are going to change, from there you will depreciate for the remaining useful life. Okay, quickly we will see one more. What is that illustration number? 5.26 illustration 11. Okay, quickly see this, it will be done. So machinery cost 6 lakhs, correct? Machinery cost is 6 lakhs, depreciated SLM basis 10 years. Okay, the estimated useful life in the third year is only 5 years. Okay, so first year depreciation 60,000, second year 60,000, third year 60,000. What is the balance of asset? 1,80,000 if you minus, it will be 4,20,000. 4,20,000, correct? Now you are telling it will come only for next 5 years. So simple, divide by 5. Okay, so the fourth year depreciation will be 4,20,000 divided by 5. It will be 84,000. Clear? So take the balance and depreciate over remaining useful life. That's it. See here, 84,000. So that's how you will calculate. Very simple. This is very easy, right? It's not a difficult at all. Take the balance, remaining useful life, apply it. Okay, we'll quickly jump to next topic. Revaluation of plant and property, plant and equipment. Okay, we are done with the chapter. Very quickly, 2 minutes. So what is this? What is revaluation? Revaluation means what? The asset, suppose building or some asset we'll take building. Okay, that we had spent only say 10 lakh rupees to buy this building, but because there was some metro or some government told this property value is in this area, it's all increased. Okay, the value has significantly increased. Or ulta, the value you bought it for 10 lakhs, but because all the area changed suddenly and the value of the asset has decreased all of a sudden. It's not a depreciation. It did not decrease because you used the asset, okay, or because of technological advancement. It decreased because all of a sudden. Okay, that means you can revalue the asset. Okay, you can revalue upwards or downwards. Okay, so when you revalue the asset, what is the accounting treatment that you need to do? Okay, suppose you have a building, we bought it for 10 lakhs, I told you. Now we will depreciate it. We would have used it for 1 year. We would have depreciated 1 lakh. The value of the asset is 9 lakhs. Now you felt after depreciating that the value is not 9 lakhs, but it is say 20 lakhs, because the government came up with some metro project or airport nearby. The value has doubled of this building, so it is 20 lakhs. So what you will do? You will increase the value of the asset. Increase the value of the asset how? Debit the asset. Okay, increase the value of the asset how? Debit the asset. Correct. You should credit something. When you increase asset, you should credit something. Are you getting what I'm saying? You should credit something. Balance sheet will not match otherwise. So that what you will do is, when you are increasing the value of the asset for the first time, you will create something called revaluation reserve. Okay, revaluation reserve. Okay, so remember this, if you are increasing first time, directly it will go to revaluation reserve. Is this your day-to-day profit? Is this your profit from business account? Is this your profit from sale of goods? No, this profit came to you all of a sudden because it was not your day-to-day activity. So you cannot take it through P&L. You cannot credit your P&L and show I made a profit of 10 11 lakhs this year. No, you cannot show it like that. So what you'll do, you'll directly take it to revaluation reserve account, which is outside your P&L. That means directly it will go to balance sheet. Correct? It will directly go to balance sheet. So first time increase without prior nothing you have done, just it is increasing, then you directly take it to revaluation reserve. Now if it is decreasing, suppose if it is decreasing, then even though it is not your business activity, you will still debit your P&L. Losses, your loss will be projected through P&L, but profit, it will not be projected through P&L because it is not your day-to-day profit. But even though it is not your day-to-day profit, the day-to-day loss, you will project it through P&L. That is your whatever the decrease in the value of the asset will be charged to P&L. So this is a rule of accounting. Okay, don't break your head too much. So if there is decrease in value of asset, charge to P&L. If there is increase in value of asset, go to revaluation reserve. Now keep this much in mind. Next, sir, what will happen? Sir, first we increased. First asset was increased. Okay, but later again we felt after 2 years, no, by mistake we have increased so much. We should not have increased. There was an increase, but we have increased a lot. Got it? So suppose we have I told you, 9 lakhs was the asset value. We increased to 20 lakhs. But after 2 years we realized we should not have increased to 20 lakhs. We should have increased to only 15 lakhs. The value of the asset is only 15 lakhs. So what you will do, now you have to reduce the asset. Reduce the asset means credit the asset. Correct? Credit the asset. Debit what? Because you have already increased before by crediting revaluation reserve, reduce the revaluation reserve to that extent. Okay, reduce the revaluation reserve to that extent. And if you want to decrease even further below the asset value that you have in your books, okay, as on the date of increase, so revaluation reserve that is sitting in our books is say 11 lakhs, and you want to decrease now is only 5 lakhs, so you will reduce the revaluation reserve 5 lakhs. Okay, but you want to decrease 15 lakhs, then what you will do, you will first decrease 11 lakhs of revaluation reserve that is already there, then another 4 lakhs also you want to decrease, that you charge to P&L. That you charge to P&L. So did you understand what I've written here? First there was an increase, then there is a decrease. Then what you'll do is reverse the revaluation reserve, and then remaining you charge to P&L. Remaining, if you want to decrease further, then you charge to P&L. Okay. So again, similarly, ulta case, if there was first decrease, that means you have charged to P&L first. You have charged to P&L already. Then there is increase. Then if I know by mistake we have reduced, we have to increase now. Then simple, credit P&L to the extent you decreased first time. Correct? Credit P&L, that means increase P&L, that increase your profits to that extent you have decreased before, and then if it is increasing even further, that means your decreased profit and loss was 4 lakhs, but you want to increase 6 lakhs now. First 4 lakhs you put it to P&L, show it as a profit, okay, no problem. Then 2 lakhs extra what you want to do, that you put it to revaluation reserve. Did you get it? Did you get it? Very easy. Correct? So first, if it's a first time increase, revaluation reserve. First time decrease, P&L. First time increase, then decrease, reduce the revaluation reserve to the extent you had increased. Then even further you want to decrease, P&L. Okay, then first decrease, then increase, you would have charged to P&L, reverse that P&L effect, then then you transfer to revaluation reserve the remaining balance. Okay, easy. Now the last topic, amortization. So what is amortization? There's something called intangible assets. What are the examples? Patent, trademarks, streaming right, this Netflix. Okay, if you make a movie and you give it to Netflix for streaming for 1 year, that right is also an asset. They would have paid money for it, so that is also asset. Correct? They're going to get economic benefits, people will watch it. So that streaming rights also is an asset. Goodwill is an asset. Software, you have a software, it doesn't have a proper form, correct? It is just a software in sitting in a system, that also it will cost a lot, correct? So that also is an asset. Now when you want to depreciate these assets, okay, which are intangible assets, then what you do is you can depreciate, but that nomenclature of depreciation is changing to amortization. That's it. So method of depreciation, everything is the same. Okay, only depreciation of an intangible asset is called amortization. So there is nothing different. So you don't have to panic. There is nothing new in this. So amortization is nothing but depreciation of a intangible asset. Intangible asset is what? Something that has no physical form. So if it has a physical form, it's a tangible asset. If there's no physical form, it's a intangible asset. And such intangible assets, when it's depreciated, it's called amortization. And what is the process for amortizing? It's the same. Whatever you did for depreciation, do it for amortization also. Done. Kel khatam. Okay. Quickly, if you run through everything, see what all we studied now. We saw what is how asset is classified. Then what is depreciation, methods of depreciation, SLM, WDV, sum of US digits method, and capacity based, correct? All the formulas we saw. After that, we saw what is profit or loss on sale. So this is the major topic. So the first few was just a build up, but profit or loss on sale of fixed assets is the main thing. So again, we saw two things. Okay, if provision for depreciation is provided or if it is not provided. If provision for depreciation is not provided, it's the same, it's very simple. You charged depreciation to asset account itself. If it is provided, then you create a separate account called provision for depreciation account. Asset balance will be maintained at its cost. Now at the time of sale, what we do is we transfer the balance of the asset, in case where the provision for depreciation is created, to a new account called disposal account. In case of when it is not created, you will provide depreciation in the same asset account. Okay, sometimes in the same asset account, even though you're not providing provision for depreciation, ICAI will ask you to prepare a machinery disposal account. Still, don't panic, prepare it. That's it. Okay, then we saw method of change in method of depreciation, then change in estimated useful life. I told you simple, don't go back, no karma. Whatever balance is there, from there you go forward. That's it. Okay, if you solve, then revaluation, we saw this. You can I will this will be there in the description. You can download and revise. Okay, then amortization is nothing but depreciation for intangible assets. Done. Entire chapter is done. You solve all the problems after seeing this video. You will have total clarity. Still, if you have any question, if you have any query, if you have any difficulty in any problem, come back to me, put it in the comments. I will help you out. Okay, you can download our app, HM Commerce Education. You can chat with us directly. If you send a message, I will reply to you. Okay, or you can comment here. Comments, it's very difficult to read, so it's better you chat with us through our app, so it becomes easy. And also these content will be available for free on our app also. Okay, if you're not finding it in YouTube, if you're finding it difficult to download, you can download it from our app. Okay, uh, all the best, students. So we are done with this topic. So please let me know which other topic you want for me to record like this. Okay, that quick revision videos. So in 1.5 hours time, we have finished the entire depreciation and amortization chapter, covering all the topics. Okay, goodbye.